This is going to be today's video review for Monday, October the 26th for 2015 for Drummond Energy Bands. Please read our trading disclaimer. So we're going to trade, and let's question everything that we place on our charts. Let's determine the best possible edge for our trading. Why? Well, because we want to survive in trading. We want to question everything. We want the best. And that's what I've done. I've put everything on the chart that I could afford, and this is all I need now. Let's have a look at some of these very simple concepts that visual energy analysis can be used, for example, trading oil, the December contract. So if you're just joining us, when this white dotted line hooks up, we'll draw a valley of support, and then we'll wait for price to pull back to it. It's very relaxed. And as you see, price goes higher and the white dotted line hooks down. We'll draw a crest of resistance, and we'll wait for price to pull down and come back up to it before we look to do anything with these lines. So this is our very simple approach using VEA. So here this morning in the CL, our trader is up bright and early. Price pulls back to this level here at about 44. Let's see, 44.57. So I've drawn 57 here on the right chart, and you'll notice as we pull back to it, we're getting a green brick, and our lower energy bands are showing support for this valley of support on our left chart. There's no reason why on a green bar like that, our trader would not want to go long. So he's long, managing the lower energy, and you can see how price pulls back to our mid here, which actually has two of our mids, and pushes higher on up. Now as price goes higher, our trader is thinking that he wants to be a continuous buyer. So as price pulls back to this midline here on the left chart, you'll notice it here on the right chart, this white dotted line. On a green bar, our trader would go long, but with the expectation that this crest of resistance here at 44.83 is going to be taken out and go higher. But you'll notice that that doesn't happen, and we've had clues that it may not happen because we've drawn the 44.83 here. Price went higher above it. You can see it went sideways. We've created our own crest of resistance in here with our trade chart. So as price pulls back, you can see how it's struggling to get higher. This upper yellow area is down. In other words, our bricks, the top of the bricks go sideways to down, and on the red brick we're going short because the crowd has lost its push up. And you can see how when we go lower, what is taking place is we're breaking not only below this white solid line here that's drawn on the white dotted line on the right chart, but we're breaking below this dashed white line, which is this thick white line here on the left chart. So we're getting two chart frames or time frames of energy ganging up to push a strong trend. And with the upper yellow not being down here, our trader would be just salivating, looking to get short on a red brick. And you can see, monitoring the upper yellow here, price continues to go down till about 44.20. Let's have a look at the S&P. Our trader's up early, trading the December S&P Mini. This valley of support gets broken. Price returns to it here for an opportunity. You can see how price pulls back up into here. At any point here on a red brick, either here or even here, is where our trader would engage the short that would continue to push price much lower. Our trader would have an opportunity here, shown here on the right chart, to get long up into this white horizontal dotted line shown here on the left chart with the down pink arrow. This would be an area in which we would monitor. You can see how price went sideways. We have rules that show exactly how to read this chop and know that we're going to be looking for the long as price comes back down to our solid white midline here to engage the trend to go much higher, because there's two chart frames on this left chart that are telling us the energy cannot push down and price would go higher. Sure, we have an attractive edge that we talk about. It's 87% for our AAA setups. let's look at the probabilities of the indicators that are out there, each one being very, very attractive and promising great returns. But what we're not talking about, slamming our ham that eventually, this probability is going to work. We're going to show you and help you understand VEA, because VEA, the new technical analysis, shows and reveals the structure of the market in real time, where order flow cannot overcome the crowd's energy. If you're interested in learning further, send us an email at jb@drummondenergybands.com, and we wish you the very best this week.